9 a.m. With 26 minutes, and I'm going to provide you guys with a quick update on the markets. Before we start though, as always, I need to stress that trading financial markets unfortunately is risky. Most people that try to trade, they trade very short term, and because when you trade short term, it's much more difficult than trading long term many times. Then there's a risk that we'll lose money. And if you trade with leverage, you can even lose more than what you invested. So you need to bear that in mind. As well, I'm going to conduct live technical analysis here. I'm going to show you what I think is going to happen with the markets. And I've been doing this since 2006, but even if I have been doing it since then, again, it's sort of it's more of an art and a craft than a science. So you need to bear that in mind. Good morning, Antonio. Antonio's in the chat box here. Thank you so much for joining me today, Antonio. I hope you're having a good morning so far. If you want to join in the chat box, just sign into your YouTube account. It's free to create one, and you'll be able to ask questions and interact. As well, if you like this presentation, don't forget to hit that like button. It's down here. So very, very straightforward. Let me know as well what you think about the volume. I am using a new microphone as well. Let me know if you like this better or the one I used to use, I think 2 weeks ago, right? Okay, let's kick off. Let's waste no time. Alright, this is the euro versus the USD, and this is a daily chart. Sorry, a 4-hour chart. A few days ago, we said if we would take out 1750, this market would rally up to the May 22nd high. We reached that level 2 times yesterday, and if you were scalping, this was a good opportunity to book profits. Why? Because sort of the last low was down here, and when the market had moved, it moved up with about 183 pips, okay? And 183 is quite a good move, and specifically it's a counter move. So what's happening is that some people that trade the long term, they look at this decline from the April high all the way down to the low, and then they're like, all right, we corrected enough. We sort of corrected a good 324 pips. So they in essence just try to sell here, hoping that this is just a corrective move, and then they're gonna move back down to the low. And I do think that eventually we will move back down to the lows, but I disagree that this is the optimal level to sell. Why? Because in the short term, we are dealing with an uptrend. This is the trend defining low, big picture May low, and then you got the June 1st low, which is here. And we can push this up actually a bit and make it the June 5th low. I just need to reload this page. I did some analysis just 2 hours ago, and I just noticed that that analysis was not saved. Anyhow, May 25th, June 5th low, okay, and that is going to be my new trend defining level. So I'm going to work with that, and that's sort of the shorter level that people are focusing on. And here, just using a simple Fibonacci from this low to this high, gives you these 3 fibs, and you can see we just crashed through the first fib, which I think is fine. Here is a resistance, which potentially will now turn into support. So I think around this level, but actually already from the 50% correction level, we also find this red line, which is a 5-day exponential moving average. I think somewhere here we might get a positive reaction. Now if you look at the time, it's 9:30 a.m. so still quite early for the market to bottom out. If it will bottom out, we'll probably try to bottom out in a few hours time, probably around maybe 2 o'clock London time or 3 o'clock London time. But it's very difficult to sort of time that, but I think if we push through here, we could again sort of go maybe a little bit lower, but as long as trade above the 1650 level, which is this level down here, then the shorter term is going to be bullish, and I think the market can revisit this week's high, but it's unlikely that it's going to touch this high today. Okay, it's probably gonna maybe try to end the day down here, and then maybe Monday morning head to the upside. Today doing a special, so we're looking at the pound as well. Pound as well is in a corrective move to the upside, and the price here is in a fragile uptrend, and usually when the market goes down and then all the way up, it tries to test this low. Okay, it tries to test this low, and I think that's what's gonna happen. So I made some adjustments here. I'm looking at 33.50. From that level, I would suspect that traders that want to trade this corrective move and will try to get involved, and that they will remain bullish above the June 1st low. Here, they will look to risk about 95 pip. If the market swings to the upside, touches the high, they make 128, and if it touches the May 22nd high, 143. Again, that's a good risk-reward ratio for trading the short term here. So when does the market turn bearish here? Well, it turns bearish when we take out this level, and it's the same thing here with the euro. Potentially, if we take out this level, the market might be sort of fractured enough to continue to move to the downside. But we need to take out those levels. Until that happens, I'm not comfortable with being bearish. Now let's go back to the normal program. So this is Bitcoin, and Bitcoin is doing okay. There's not much happening, but the market did find support here on May 29th. The market pushed to the upside, then it tried to test how valid this breakout was. Again, remember what I just said about the pound and the euro. The market was getting to the downside, bottomed out, and then usually the market wants to test that low. Here I would argue that the test was successful because the market moved to the downside. This is just a simple fib from this low to this high on this daily chart, and we corrected a little bit more than 50%, and then the market had a nice bullish reaction. The only issue right now is that the market did not decide to take out its high, which is a bit of an issue, but I wouldn't worry too much about it right now. There are two ways of dealing with this. I think one could either just leave the stop loss here. In other words, we don't do nothing about it. The alternative is maybe reducing the stop loss, maybe to just below this low here, because I suspect if we trade below this low here, that the market could trade back and test this level here. Here's crude, West Texas. So a few days ago we said look to sell up here, and the market moved to our advantage. It did, however, not go all the way down to the target, around $63 per barrel. I have been reducing my key level, which is up here, and so we're running a very tight stop right now. The market did swing back up to the sell zone, and again, fib from this low to this high. I'm using this high. This is first corrective move, 61.8. So if the market wants to reverse, it should reverse here. We already seen two reactions here, and hopefully this is gonna be it, and this is just gonna head to the downside. Here's gold, and gold is moving slightly to the upside today, and the market tested that sell zone that I've been focusing on for quite some time. Unfortunately, this market is just boring. There's not much happening right now. If one is bearish, well, I'm gonna remain bearish. Really, the trend is bearish, so I'm gonna stick with the trend. And as long as it is bearish, I'll just focus on that. Simple as that. This is the DAX, and the DAX is moving to the downside. I wouldn't look too much into it, but the DAX is moving to the downside. As I've been saying over the last few days, it's a bit of a complicated market to trade, just because the market, if you look at it from a daily time frame, is not doing anything. There's no trend in this market since May 2017. So it's impossible for me to say exactly what's going to happen, but I can tell you this, that if we were down here, I think traders would be quite keen on going long, and I think we can wait for that or get some sort of better understanding what's going to happen here. Obviously now in the 4 hour, if we take out the May 31st low, this market can continue to head to the downside, so it looks a bit bearish to me, but I wouldn't be trading it. And that, guys, is today's morning update. Today we have Canadian non-farm payrolls. Let's see if I can load that. So this is the Canadian non-farm payrolls. Sorry, Canadian non-farm payrolls is going to be out today at 1:30 p.m. London time. I'm gonna host a special webinar about it here. Canadian non-farm payrolls offers, it's like another US non-farm payrolls really. except that it just affects Canadian pairs. So gonna provide live coverage with that. We're gonna use my breakout system that I use and see if we can derive any interesting trade ideas ahead of the event. So the actual data out at 1:30, and my actual webinar is gonna start 15 minutes before that, so at 1:30. So we have a few minutes to get to know the data, get to know the markets, and then we just wait for the data to be published, and we'll see what happens. It's free to join. Just come back to this page here at tradecaptain.com and the live trading room. Antonio, thanks so much for joining me in the chat. Again, guys, if you like the video, don't forget to click on it and then hit that like button. No like so far, so please like it if you like it, of course. Have a good day, and I'll see you guys on Monday. Thanks.